So currently the US stock market is taking a knock, and this could be the beginning of a stock market crash. It's times like this where people get to panic and sell their shares, and also it's times like this where people get to make a lot of money from the stock market. So let's look at the two ETFs I'll be buying more of in 2025. Hi guys, how's it going? It's Aldatom Chagi and welcome back to my YouTube channel. I invest in the US stock market and most people do as well, and there's a lot that is happening in there and our investments are affected badly. There are trade wars, if you did not know, and this is negatively affecting the stock market. In simple terms, a trade war is an economic conflict where states impose tariffs against each other and make trading very difficult. The US and other countries like Canada, China, and Mexico are in trade wars, and these are countries that do business with each other. And sadly, this will result in a spike in inflation, causing items to be way more expensive, and this is going to affect the profits of the listed companies. So this will cause a huge slowdown in spending and will harm the market. Now, the thing is, these companies benefit from us buying. When the inflation is actually high, we no longer have enough money at our disposal to buy the things that we were always able to buy, or rather to afford the things that we have always afforded. Now, these companies' profits are going to be so much affected, and as a result, the share price of these companies are not going to perform as greatly as they should. Because like I say all the time, that the share price is a reflection of what is happening in the company, especially with their finances. So when now their finances are going to be taking a knock, the share price will also take a knock. So there is fear currently that if this trade war continues, then these companies are not going to benefit investors in a way that investors want to be benefited. So now the question is, how do we invest going forward? And understanding that this whole situation is actually so much external to these companies, we cannot fault the companies. There's only so much that they can do. Unfortunately, the share price are declining, but what can they do? And as investors also, we have to be safe. What more can we do? It's a matter of finding a way in which you're going to continue investing and just make sure that you are not now going to be so much depressed when the market takes a huge knock. That's if it ever gets to, but you just have to play it safe. And at times like this, honestly, we just thank God for the ETFs, because investing in individual companies can be way more risky, because when the market declines, they also get to decline so badly. So ETFs are actually there to just make sure that our money is still losing value, but just not at a faster rate. So if we look at the S&P 500 index, we actually get to see that in 1 month it is down 3.96%. And for us to see that there is a stock market crash, the market has to be down 10%. We are not yet there. So we are not experiencing a stock market crash. So understanding the fact that the S&P is actually used to measure the US stock market, we see that it is actually not looking so good in the US markets. And the S&P being one of the best performing indices, then I am going to focus on the S&P, because I know that when all of this dies down and when it recovers, then I am going to be good. Because if we look at the 1 year movement, it is up 14.45%. And there was a time where I did a video on the best growth ETFs. I actually had it on my list, and at the time it was up by 20%. But also that's what the market does. So it's through these fluctuations actually where we get to buy the dip. But now the thing is this even a dip? I know that every downturn is actually a dip, but is there going to be more dips than this one? Nobody knows, and we can only speculate. But if now the market continues to take that much of a knock, then for somebody like myself, I would not worry much about losing my money, because then I do see that this is a buying opportunity for me to invest more money, so that when the market recovers, I get to benefit. So already I do have the S&P 500 ETF in my portfolio, and it is up by more than 10%. So I am going to buy more of shares in it. And then the second ETF that I am going to invest in is the Nasdaq ETF. So in the past month, the Nasdaq is down 5.26%. This is way more than the S&P, because S&P right now is only down 3%. And that's one thing about the S&P and the Nasdaq. Nasdaq gets to win more than the S&P, but when the market goes down, the Nasdaq actually takes a huge knock as compared to the S&P. And then if we look at the 1 year movement of Nasdaq, it is only up 14.49%. And at the time when I did that video, I think it was up a little bit above 20%. but it was performing way more than the S&P is performing. So these are actually the two ETFs that I am going to be focusing on, and simply because I know that in the long term they do give good results. And in times like this where there is some sort of instability in the markets, I am going to adopt the rent cost averaging method of investing, which is what I've been doing all along, but I'm going to continue doing it because I just feel like it's way too risky right now to invest a lump sum, because we don't know where the market is going. We don't know if it's going to get worse, if it's going to get better, and when that is going to happen, nobody knows. So I feel like it's going to be so much of a risk to take so much of your money, put it in thinking that we are now in the deepest dip, to find that next week it could be worse. You could lose most of your money. So rent cost averaging right now is going to work perfectly. It always works perfectly, but right now it's going to be way more beneficial than ever. And there are people who are actually believing that it is the most riskiest time right now to invest, which is valid. I mean, there are always logical reasons why people must not invest. For example, looking at COVID, that was a logical reason why people must not invest. But do not forget that whenever there's this kind of hiccups in the market, when the market goes up, people make a lot of money. You get to benefit more. And again, the saying that when others are greedy, you need to be fearful, and when others are fearful, you need to be greedy, that should be taken with a pinch of salt, because nobody knows what the market is going to do next. Which is why I believe that rent cost averaging through the market is the way to go, especially in times like this. I'm not going to stop investing. I am not going to sell my shares, but instead I am just going to gradually buy more shares. And if the market goes up, I'm benefiting. Whether I have put in a lump sum or not, I am still going to benefit from the market. And also, I'm just thinking about it now that if you say that you're not going to invest, you have a lump sum and then you will invest when the market recovers. When are you going to know that this is when the market is recovering? You know, I just feel like that goes with a lot of speculation, and we cannot time the market, but rather what matters is our time in the market. So personally, I'm just going to position myself to get more returns. You know, getting something is better than just not getting anything. So that's how I'm going to invest, but I'm going to be focusing on this two ETFs, because I know for a fact that these are some of the two best performing ETFs, and I would not want to miss out. And that puts me at ease is that the market always recovers, and this trade wars, this will not continue like this forever, because even this head of states, they do understand that this is going to harm the economies. You know, it might go further, but I don't think they will continue to run the states imposing so much tariffs on other countries, whereas they are in business and they need to be in a fair dealing, understanding that they are both benefiting from each other. So I believe that this is going to die down. I mean, this is not the first time ever these trade wars are happening. They have happened before, and history repeats itself. You know, maybe not exactly, but it does. And sometimes you need to understand what happened previously and what was done there, and how people benefited from this hiccup previously, so you can also know what you are going to do. So personally, I'm like, okay, this is a good time. This is good times for most people, you know, unless if you were investing so much of your money and not having any more savings, then you are in trouble. But generally, these are good times. Can we have a stock market crash? You know, we missed the COVID one because, yeah, we were kids then. But there are always times in the market where people are going to benefit, and the market will make people a lot of money, and we need to benefit from that. So what I can say is just go and think about how you are going to navigate the market. Don't wait for the market to take more of a knock, because what if it does not? Don't wait for a perfect time, because there is no perfect time in the market. And that's it on my video on how I'm going to be investing going forward. Thank you so much for watching. I will see you in my next video. Bye.